What's going on, investor family? I'm Stock Market Jay, and I'm here to say today, bringing you some news you can really use. All right, guys. So what I wanted to do is go ahead and give you guys a detailed breakdown on what is fundamental analysis. It seems like nowadays no one wants to do the fundamental research. No one wants to learn how to evaluate a business. No one wants to actually learn the processes of understanding what a fundamentally sound business is and what it looks like on paper, right? Everyone just wants to close their eyes, swing, take a shot in the dark, and hope that they find a winning stock. And that's not how you play the game. You're going to lose money like that. Fundamental analysis involves examining a company's financial statements, which include balance sheets, income statements, cash flow statements, okay, and the broader economic indicators to uncover a security's intrinsic value. The result of such an analysis should give you the investment's true value based on a company's financial health, the market, and economic conditions. Investors perform fundamental analysis to gauge whether or not a company is worthy to invest in based on its projected worth, right? So you do the fundamental analysis to determine the worth of a business based on past performance, current performance, and we're looking to project those numbers into the future for future performance of a company, right? Understanding parts of the intricate parts of fundamental analysis are going to be listening to earnings calls, reading those quarterly reports, reading those 10Ks or those annual reports, paying attention to those shareholder meetings, right? This is going to be a part of the management team, right? Understanding the role of the management team. Do they have a talented, strong management team running the business, right? These are all things that you need to understand, as well as PE ratios, price to sales ratios, price to books ratios, to determine whether a business is a worthy investment, whether it is a growing business, right? Like, how can you tell if a company is going to be growing, but you haven't even checked to see if they've been growing earnings for the last 8 quarters at least, right? You don't even know if they've been growing earnings and revenue to even begin to theorize whether a business is growing, right? You haven't done an investment thesis to determine if this is a worthy investment or not. You haven't done none of the fundamental research that's involved in stock picking, but yet you want to pick stocks, right? A lot of people have it backwards. A lot of people are just listening to internet gurus and social media influencers when it comes to what stocks to buy, but you don't even know if these stocks are overvalued, because a lot of these people that you're listening to online, they're giving you stocks that are overvalued and inflated and aren't a worthy investment, right? You don't know if a company has strong financial health. You don't know if they have great leadership. You don't know if they've been doing what they said they were going to do, which means on the quarterly calls, on they'll actually tell the investors what they have planned in the future. And then also you can go back on those past calls and see if they've kept their promises to investors. What are they doing to return value to you, the shareholder? Are they buying back stock? Are they paying down debt? Are they reinvesting in the business? You're not doing none of the fundamental analysis, but you want to reap the rewards and you want to reap the increase that comes with investing in winning businesses, but you have no worldly idea to know whether a business is winning, if a business is growing, or if a business is dying. Because if a business is growing, the stock is growing. If a business is dying, the stock is going to zero. All right, investing family. Peace.